Was the American dream. You work hard, you play by the rules, you're going to be able to afford a home.
What's outrageous is your tax dollars are helping Wall Street buy up single-family homes.
Our largest portfolio would be in Atlanta, in Charlotte, in Phoenix, in Tampa.
Tricon is trying to buy 800 houses a month.
Since the financial crisis of 2008, the Blackstone Group have been buying up foreclosed homes.
Invitation Homes owns more than 80,000 rental houses.
They quickly became the largest owner of single-family homes in the country.
Making it even harder for young people and working-class families to own a house.
Real estate values are bottoming here.
2024, we think we're going to be a lot more active.
Blackstone struck a roughly $10 billion deal for another apartment landlord.
And now they've decided that they want to own every single family home in America.
Introduction: Threat to the American Dream.
94% of Americans believe home ownership is the cornerstone of the American dream. But lately, that dream feels increasingly out of reach. Why? High mortgage rates that have soared past 7% this last year, low inventory as of May 2024 of 787,722 listings, and skyrocketing home prices averaging at $420,800. While home ownership is a dream for many, 51% of Americans fear it will remain just that. And that's not all. First-time home buyers are faced with a new competitor, big Wall Street investors, coming in hot with all-cash offers. Investors in the single-family market can make it hard for average home buyers to compete. 25-year-old Troy Bielicki from St. Petersburg experienced just that. With a baby on the way and excitement in their hearts, Troy and his pregnant wife set out in 2022 to find their first home. Their budget? $200,000. But soon, Troy found that prices in Florida were north of $400,000. After weeks of house hunting, they finally found a place in Largo that fit their budget. Troy secured a $190,000 loan and a down payment of $10,000 from a first-time home buyer program. He made a full price offer. The next day, an unknown LLC had snatched the home away with a fat $7,000 overbid. It took the Bielickis over a year to finally find a house they could afford. And that Largo home? It's now a rental. The Bielicki's experience suggests investors are actively pursuing affordable options. A Redfin report confirms this. Investors bought 26% of the country's most affordable homes at the end of 2023, up from 24% a year ago. Is the trend picking up in 2024? Let's investigate.
This video is brought to you by Houzeo, America's most advanced home buying and selling platform. Americans across the nation are saving on commissions with Houzeo.com. You can too. Check out Houzeo.com on the web or the Houzeo mobile app.
Wall Street in the housing market. The housing bubble burst in 2008 opened the market to opportunistic investors. Foreclosed homes were up for sale at discounted prices. Investors were able to purchase at least 200,000 single-family homes between 2011 and 2017 for a mind-boggling $36 billion. Investor purchases surged again during the COVID-19 pandemic, accounting for nearly 28% of all single-family home purchases in 2022. By the end of 2023, mega investors had purchased homes for a total of $32 billion, down by 2%. A chunk of this investment goes into purchasing single-family homes turned into property rentals. But why single-family homes? Because they're affordable.
Wall Street would see an opportunity, buying modest single-family houses, the kind you'd see on any middle-class suburban street, and then renting them out.
Most investors look for properties under $500,000.
They're coming in, they're buying it at cash, and then they're going to hold them as rentals.
This allows for faster growth in terms of equity and rental income. So, who is the biggest player in this space right now? The Blackstone Group. In 1985, Peter G. Peterson and Stephen A. Schwartzman co-founded Blackstone. Their starting investment, $400,000. Peterson served as chairman in the firm's early years, but retired shortly after Blackstone's 2007 IPO.
I was something I never thought I'd be, an instant billionaire.
When you think about the history of Wall Street, and when you read the current history of Wall Street, there are very few people who have made this much of an imprint.
You've got to be able to tolerate failure because you're doing things no one has done before.
The IPO was set at $31 per share amid significant interest in the offering. Blackstone Group's shares began trading under the ticker symbol BX. The IPO raised $4 billion, valuing the firm over $30 billion, which made them bigger than Amazon at the time. After Peter's retirement, CEO Stephen A. Schwartzman took the firm to the next level.
We own 250 companies with 750,000 employees, so it's pretty big.
Under Schwartzman's leadership, Blackstone expanded its reach and diversified its investment portfolio to include private equity, real estate, credit, infrastructure, hedge funds, insurance, and growth equity. The company manages over $1 trillion in assets, one with a T. Blackstone is rich and powerful.
How did you get the house back from the bank?
I bought the bank.
They have the resources to invest millions in buying real estate, and here's a lowdown on their most recent acquisitions. Tricon Residential. On May 1st, 2024, Blackstone Real Estate Partners X, BREP-X, and Blackstone Real Estate Income Trust, BREIT, acquired Tricon Residential, a rental housing company. The deal was an all-cash transaction valued at $11.25 per share, bringing the total equity value to $3.5 billion.
Shares of Tricon Residential are up almost 30% today after Blackstone announced it plans to buy the Toronto residential property developer for $3.5 billion.
Tricon has a pipeline of new single-family homes in the US valued at $1 billion, and a separate pipeline of new apartments in Canada valued at $2.5 billion. Air Communities. Blackstone Real Estate is set to take over Air Communities, a private rental housing firm. The deal involves BREP-X acquiring all common shares of Air Communities for $39.12 per share. The total transaction value is approximately $10 billion. Air Communities boasts a portfolio of 76 rental housing communities in coastal markets like Miami, Los Angeles, Boston, and Washington, D.C. Blackstone plans to invest over $400 million to improve and maintain these properties. The transaction is expected to close in the third quarter of 2024. Blackstone's plan involves more than just buying homes. They are also investing in real estate adjacent businesses. For example, in December 2023, Blackstone and its partners bought a 20% stake in a joint venture. That had roughly $17 billion of signature loans with the Federal Deposit Insurance Corporation. This includes loans for apartments, stores, and offices. Blackstone, with Canadian Pension Plan and Rialto Capital, bought a slice of these loans for a discount. They paid $1.2 billion for loans worth $2.3 billion. That's like buying a dollar item for 72 cents. Unsurprisingly, Blackstone has used this strategy before. Blackstone and the housing crash. The 2008 housing crash forced nearly 6 million Americans to foreclose their homes. This flooded the market with cheap properties. Prices fell from $217,900 to $197,100 between 2007 and 2008. That's a record 9.5% drop and a difference of $20,800. Where everyone saw red, Blackstone saw a golden opportunity, buying distressed properties cheap and turning them into rentals.
So the house behind me here is owned by America's biggest landlord. They own over 80,000 of houses like this all across America.
Blackstone created Invitation Homes in 2012 by merging Treehouse and the Dallas-based property management firm Riverstone Residential, specifically to acquire single-family homes. Between 2012 and 2016, Invitation Homes purchased over 48,000 homes at depressed market prices. Blackstone employed a multifaceted financial approach. They utilized securitization, launched an IPO for Invitation Homes, and secured its designation as a REIT. This real estate investment trust allows them to invest in large-scale, income-producing real estate. Additionally, they leveraged government support from Fannie Mae, Freddie Mac, and HUD programs, along with a credit line from Credit Suisse. Blackstone's immense resources, $210.2 billion in assets under management by year-end 2012, smoothed their entry into the market. They secured over $13 billion in capital. This meant they could splurge $150 million per week on property shopping. On March 15, 2017, Blackstone merged Invitation Homes with Starwood Capital Group, creating the biggest landlord in the USA with 82,000 rental homes. On November 26, 2019, Blackstone cashed out all their stocks in Invitation Homes for a cool $1.7 billion. Blackstone's home rental business has made nearly $7 billion since its 2017 public debut. Now that is a deal. On one hand, the everyday American is struggling to buy their first home. And on the other side, we have behemoths like Blackstone. Institutional investors could own 40% of single-family rental homes by 2030. Can regular homebuyers compete with Wall Street giants, or is the US poised to turn into a country of renters? Tell us your thoughts in the comments below, and don't forget to like, share, and subscribe to the channel.